If you've ever read your auto or home insurance and wondered what happens when a claim is bigger than your coverage limits, you're asking exactly the right question. Most people assume their policies will cover whatever goes wrong. But every standard auto and home policy has a ceiling, a maximum the insurer will pay, and once a claim passes that number, the rest can land on you. That's the gap an umbrella policy is designed to fill. In plain terms, an umbrella policy is extra liability coverage that sits on top of the policies you already have. It doesn't replace them, and it doesn't cover your own car or house directly. Instead, it adds a higher ceiling for certain kinds of claims, mostly lawsuits and large liability judgments. In this video, we'll walk through what an umbrella typically covers, why it kicks in only after your other coverage runs out, why insurers require certain minimum limits before they'll sell you one, and why it often costs less than people expect. None of this is advice for your specific situation, just a clear explanation so you can have a smarter conversation with a licensed agent. The easiest way to picture an umbrella policy is as a second story built on top of a house you already own. The ground floor is your existing liability coverage, the part of your auto and home policies that pays when you're found responsible for hurting someone else or damaging their property. Say your auto policy covers up to $300,000 of liability per accident. If you cause a serious crash and the resulting claims total $500,000, your auto policy pays its $300,000 and then it stops. That remaining $200,000 is where things get uncomfortable. An umbrella policy is built to catch that overflow. It generally provides coverage in round amounts, often starting around $1 million, and it pays only the portion above what your underlying policy already handled. So in that example, the umbrella would respond to the left of a $200,000 up to whatever its own limit is. The key idea is layering. Your base policy pays first, all the way to its limit, and the umbrella sits above it as a backstop. It is not a first line of defense, and it is not meant to handle small, everyday claims. An umbrella policy is fundamentally about liability, meaning situations where you may be legally responsible for harm to other people or their property. Common examples that umbrellas are often associated with include a major at-fault car accident, a serious injury to a guest on your property, or certain incidents involving things like a dog bite, depending on the policy and any exclusions. Many umbrella policies also extend to certain personal liability claims that home and auto policies handle narrowly or not at all, such as some claims of libel, slander, or defamation, again subject to the specific policy terms. Just as important is what an umbrella does not do. It is not health insurance for you, it does not repair your own car, and it does not rebuild your own home. It also typically excludes things like your business activities, intentional or criminal acts, and liability tied to certain vehicles or property, unless they're specifically scheduled. Coverage details, exclusions, and definitions vary meaningfully from one insurer and state to another, so the only reliable way to know what a given umbrella includes is to read that specific policy and ask a licensed agent to walk you through it. Here's a detail that surprises a lot of people the first time they shop for an umbrella. The insurer won't just sell you $1 million of coverage on its own. They'll usually require you to carry certain minimum liability limits on your underlying auto and home policies first. These required amounts vary by insurer and state, but the principle is consistent everywhere. The reason is straightforward once you see how the layers work. The umbrella is designed to sit above your base coverage, not to absorb claims that your base policy should have handled. By requiring solid underlying limits, the insurer makes sure there's a meaningful floor of coverage paying out before the umbrella ever has to respond. Think of it as the umbrella saying, "You handle the first layer properly, and I'll handle what spills over the top." This is also why adding an umbrella sometimes means raising your existing auto or home limits to qualify, which can slightly increase those base premiums. It's a normal part of the process, not a hidden trick, but it's worth knowing before you assume the umbrella price is the only cost involved. Now to the part that confuses people most, the cost. It feels backward that $1 million of coverage could be priced lower than some of the other lines on your insurance bill. The explanation comes down to how often these policies actually pay out and the order in which they pay. Remember, the umbrella only responds after your underlying limits are fully exhausted. For most people, claims large enough to blow past a few $100,000 of existing coverage are relatively uncommon. From the insurer's point of view, that means the umbrella is statistically less likely to be triggered than, say, your collision coverage, which can be tapped by a single fender bender. Lower expected frequency of payouts generally translates into a lower premium relative to the size of the coverage. That said, price is not one number for everyone. It depends on factors an insurer weighs, which can include your location, your driving record, the number of vehicles and properties, and certain risk factors like a pool or specific dog breeds, among others. Some people will find it genuinely inexpensive, and others will be quoted more. There are no guaranteed prices or savings, so treat any figure you hear as a starting point and get an actual quote for your own situation. Umbrella coverage tends to come up in conversation for people who have something to lose financially and a realistic chance of being held liable for a large amount. That often includes folks who own a home, have savings or investments, are still earning income that could theoretically be tapped by a judgment, or who have circumstances that raise their exposure, like teen drivers, rental property, a swimming pool, or frequent guests. The logic many agents describe is that the size of coverage worth considering is loosely tied to what you'd want to protect, including both current assets and future earnings, though there's no universal formula and reasonable people land in different places. It's equally fair to conclude that an umbrella isn't a priority for your situation. Someone with limited assets and modest liability exposure may decide their existing limits are sufficient for now. None of this is a recommendation about you specifically. Your circumstances, your state's rules, and your tolerance for risk all matter, and a licensed agent or financial professional can help you weigh whether the trade-off makes sense rather than relying on a rule of thumb from a video. If you do decide to explore an umbrella policy, a few practical questions can make the conversation much clearer. First, ask what underlying limits the insurer requires and whether your current auto and home limits already qualify or need to be raised. Second, ask exactly what the umbrella covers, and just as importantly, what it excludes, since exclusions are where surprises usually live. Third, ask how the limit is structured, whether it's per occurrence, an aggregate, or both, and how that interacts with your base policies. Fourth, ask whether keeping all your policies with the same insurer is required or simply preferred, because the rules differ. And finally, ask for an actual written quote rather than a ballpark, since prices vary by state, insurer, and your personal profile. It's also reasonable to compare a couple of quotes and to confirm the answers against your state's insurance department or other official sources. Insurance terminology can feel slippery, so don't hesitate to ask the agent to restate anything in plain language until it genuinely makes sense to you. So what should you take away from all this? An umbrella policy is a layer of extra liability coverage that sits on top of your existing auto and home insurance and steps in only after those base limits are completely used up. It's aimed primarily at large liability claims and lawsuits, not at repairing your own property, and it comes with required minimum underlying limits precisely because it's built to catch what overflows the bottom layer. The reason it often costs less than people expect is that it's statistically less likely to be triggered than the coverage that handles everyday claims, though prices and rules vary by state, insurer, and your personal situation, and no one can promise you a specific cost or outcome. Whether an umbrella makes sense for you depends on what you have to protect, your exposure to liability, and your own comfort with risk. The honest answer is that it's a trade-off, not a universal must-have. The smartest next step is to read the actual policy terms and talk it through with a licensed agent or financial professional. Again, this video is general information, not advice for your circumstances. Thanks for watching, and we'll keep making insurance clearer one topic at a time.